Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 24th of February, comes to you from London. And the colour on this screen says it all. Markets deeply in the red this morning, renewed fears of coronavirus, and we're seeing really pretty well everything being hit across the board, bar, of course, the safe havens of things like gold. So we started by looking at the dollar. Dollar actually just breaking down here, back through the cloud, so not quite on the lagging line, so we may well find support, but at the moment, the run that we saw last week in the dollar, and we've had an amazing run so far this year, just pausing for breath, but dollar is still bullish on the medium and long-term time frames, that dominant dollar factor. And the euro is, of course, sinking to new lows this month, but we are just seeing now a little bit of a relief rally there on that dollar just retreating a little bit. The Japanese yen broke out massively last week. We talked about this on LinkedIn. Really big pattern break with that weekly candle, and so we are just seeing the yen just pausing again. That yen fell heavily. That's the dollar rise, yen fall, and we're just consolidating that move. Sterling looking quite bearish against the dollar this morning. We still are bearish long term, of course, and medium term we're running the risk of wandering into that territory. A couple of downside targets there, so one 2% lower, one 3% lower, so it does look like sterling is in for a little bit of a bad week. And if we look against the euro, we're seeing a similar picture there as well. Against the Swiss franc, sterling also falling to 126. And the Euro Swiss chart, actually not here, but the Euro Swiss chart is also looking pretty bearish for the euro against the Swiss franc this week. Bitcoin sitting at $9,700, fairly flat on the short-term chart. The longer-term and medium-term charts looking bullish. We saw the US stock markets down on Friday. The S&P was down 1%, not enough to break to a new bear trend, but that looks likely this week. And the Nasdaq was down nearly 2%, and here we are seeing a break lower. So we shouldn't be surprised to see a pretty tough week ahead for US markets. The Dow also just breaking lower on that 60-minute chart. Remembering this is my long-term, my medium-term, and my short-term picture. And the Russell 2000, of course, still hasn't managed to make a new all-time high. So this is sort of a divergence area that has been a little bit of concern for the market. Looking at the futures this morning, the US market is set to open sharply down. Very rare that you see these futures off by this amount, 2 and 3%. But we're seeing the S&P future down by 2.4%, the Nasdaq E-mini down by just under 3%. So that really heralds a big sharp move to the downside for US markets. The FTSE 100 in the UK is down 3%. Coronavirus fears just really gripping the markets now, and we've been shaking that off for the last couple of weeks, but not now. It's coming back to roost with the outbreak in Korea and Italy. We really are seeing quite significant sell-offs. The FTSE 250 is down 2.7%. Again, very sharp falls here this morning. You can see on that chart, and the DAX down 3.4%. Really just plummeting. So we are bearish short term very clearly. A shortage of downside targets, so that's going to be interesting. We probably will get some new thrusts off these moves when these columns lock. But interestingly, at the moment, we are still holding on to our long-term bullish trends, but a real bloodbath in Europe this morning. And we see here on the CAC Quarant off 3.5%, so really been hit there very heavily as well. Japanese market was actually held fairly steady, and the Hang Seng actually was down 1.8%, which again has held surprisingly steady, but again now short-term bearish, long-term hasn't actually been bullish for some time. And of course, China has been propped up by the government, so we haven't seen massive falls in China, but it's hard to see how we will get to make new highs on this market. So one to watch. The Sensex down just 2%. That's turning short-term bearish as well, and the Aussie market down 2%, also turning short-term bearish. By far and away, the biggest fall in markets has been in crude oil this morning, down 3.6%. The low that we saw back on the 18th of February, starting last week, just starting to come under pressure, and we are very clearly short-term bearish with downside targets of over 4% lower. The crude level at Brent about $53. That's the level to watch. Will we go lower? will we see crude in the 40s basically? And we have got some pretty scary long-term targets to around $30, $32, $28. These targets have been in place for a very, very long time, but for the moment, it's can we hold $50? WTI also down 3.5% this morning. That chart looking pretty bearish too. And of course, the long-term chart has been bearish for some time. So these moves, in a technical sense, have been on the cards regardless of why they're happening. We're seeing here NatGas in the US falling lower as well. We've got targets to 169, 174. So it does look like we will move to make new lows in NatGas. So that's quite a worry as well. Of course, the big beneficiary of all this uncertainty is gold. We saw gold break significantly last week, broke that $1,600 mark, and now it's sitting at $1,680. We've got a target of 1705. That's a short-term target. That's looking pretty likely. Medium-term 1856, and this move here will give us a very big upside target. So gold looking very, very bullish indeed. Silver, more of an industrial metal, so demand has been in question here, but we are seeing again silver breaking to new highs as well. So that's significant. US 10-year yields sitting just low at the moment, just at that 1.4% level, and we really are breaking to new lows. So that really is showing us that the outlook for US interest rates now is pretty bearish. So that's really significant that we're seeing that break to new lows on the 10-year yield, breaking that October low quite clearly, and the September low also being taken out. So yields looking very bearish indeed. We've got a downside target to 137.60. We're now not far from that, so really quite clear. German bonds, conversely, are rising. Bonds rise in times of uncertainty, and we're seeing the bonds all looking like recovery, all pushing for higher. We've got good upside targets here on the 60-minute chart for the bond. We've got quite significant upside, so it is looking pretty bullish. This data all coming to you from Thomson Reuters Icon, or if you're a private user, Metastock Zenith. But if we go to look at the stocks, here we're looking at Yahoo Finance data, a good free data source, and I'm looking just quickly at the Copsey index. That's down just under 4% overnight. We see here the chart for the Copsey, the relative chart relative to the Dow, breaking to new lows. Downside potential for this market on the long and medium term chart of around 10%. So the Korean situation really playing through there. If we look at some of the stocks here, we've got the Dow. Again, we were down 1%, remember, on the market on Friday. We saw a big move down on Apple, also Microsoft. So the tech giants were really badly hit. Microsoft was down 3%. Still an amazing looking chart, but we can see here now that we are just seeing a little bit of a sell-off there, and Apple were down 2.2%, so again quite significant. There were a few rises, but expect a sea of red today. If we look at Nasdaq, we saw that we had a handful of stocks up. Tesla still holding in there. Unbelievable, really. That chart has just been incredible looking at the Tesla chart, and that didn't sell off on Friday, quite interestingly. AMD, Advanced Micro Devices, were down 7%, Nvidia down 5%. So we did see some pretty big fall-offs. Looking to India today, the Indian market, we saw we had JW Steel Limited, obviously a big influence there. Chinese market down 8%. Vedanta down 6%. A lot of these resource stocks, Tata Steel down 6%. A lot of stocks really falling heavily there in the Nifty 50, and not a single stock up. I can't remember the last time I saw that. So pretty bearish across the board. Now, if we look at the European market, the FTSE 100 we saw was down 3%. Only two stocks up this morning, Pearson's and Bunzl. On the downside, of course, we've got EasyJet down 12%. They've been hit by coronavirus fears, what's going on the Canary Islands, and TUI as well. We're seeing that really badly hit there. And also IAG, which is British Airways International Airlines Group, also badly hit. Anglo-American down 6%. We're seeing a lot of the resource stocks heavily hit as well. So hotel groups, anything to do with travel is really been heavily hit here. Looking at the FTSE 250 now, We have a handful of stocks up again, but on the downside, it's really significant to the downside. We've got, if we look, we've got CAS Minerals down 8%, for example, Ferrexpro down 7%. These charts all being heavily hit, long-term bearish position, medium-term changing back to bearish, failed recovery basically. Looking at Europe now, the European majors again, we've seen that European markets are down 3%. The best performer is Vivendi. They're down just 1%, so they're faring pretty well. Their long-term trend holding up, medium-term not looking good, and relative to the Dow, we are seeing a bit of a fall away here. We see the live prices just filtering in from Yahoo Finance. There's a sea of red this morning, and Kering we see is 5% down, so that's quite significant as well. And Daimler we're seeing also just pushing lower. Car makers been heavily hit there. So it's a terrible day for markets, and it looks like pretty well a tough week ahead. So just keep an eye on those price targets and watch the key levels. And follow us on LinkedIn and Twitter just to keep up. That's it for today. Until next time, happy charting. See you then.